Hussbus bus stop. Alright, what is up, everybody? JP Hussey here of the Hussey Team Mortgage Advisors with this week's Hussbus bus stop. I hope everybody's well. We're going to dive right into it. Today we want to talk about equity in your home and what you can do with it and how to kind of try and time the market. Alright? What all financial advisors will tell you in most cases is you can't time the market. And the best financial advisors, in my opinion, are the ones that try to tell you to play the long game, okay? There's a lot of cycles, right? I'm going to be the first one to say I don't know exactly how it works, but I kind of take what is given to me and, talk to my financial advisors and see what to do with my money, okay? And my opinion is play the long game. All these cycles, look at the history, see where it has gone. Obviously, you can't predict the future, but do the best you can and don't panic, all right? We're seeing some panic out there. Don't panic. I've been through a bunch of these. Just don't panic. But let's get back to equity in your home and what you can do with it, okay? We've had a couple videos like this in the past, but I want to dive in a bit more with a more detailed plan of a recent client that we helped out. And hopefully this could give you some ideas for your own personal finances and what to do with the equity in your house. Okay? So, what's going on right now is there's fear that the housing market's going to crash. I don't believe that's going to happen. It's not like 2008 where there was really bad mortgages and values were sky high. People were getting paid off on the side to get high values. It's not like that anymore. If you've bought a home or you've refinanced, you know it's a lot harder to get a mortgage. There's a lot more compliance, a lot more rules. So I don't think that's going to happen. All right? And values, like are very high. And what I believe is we feel like it's got to come back to normalcy. All right? Not going to crash, but there could be a chance that you lose some equity in your house. Okay? So what do I do about it now? How do I want to? I know we're talking about not timing the market, but kind of time the market, right? We want to create some urgency for you to get what you need out of your home, all right? Like we've said to a lot of people, it's using your home as a financial vehicle, depending on what life brings you, the life cycles, is great. It's great to have that option. And if you're a renter, you're not going to have this option that we're going to talk about, okay? So we think prices might soften, so it might be time to get your equity now, right? In the form of really cash or paying off other debts, all right? Because here's one option. You could grab a home equity line on your house, but guess what they can do? They can lower that line of credit whenever they want, the banks, okay? So even getting a home equity line sometimes isn't perfection. You might get it for 100 grand. They see values dropping, they could just drop it right down to 50, okay? And you're banking on that, all right? So home equity line's a very good option, but there are some risks there, and a lot of times they're variable rates off the prime market. If that goes up plus 2 points, that's going to vary. So if you don't like all this volatility, maybe a home equity line, all right, isn't the best for you. Just a standalone home equity line, okay? Now, let's dive onto this, because even in this example, it tells you to get maybe a home equity line on top, all right? But let's go over this one where you can get a fixed rate, you can get actual hard cash, and do what you want with it while values are high, okay? Again, I don't think it's going to crash, but I think it's going to soften. If you want to get the most out of it, maybe now's a good time, okay? So let's look at this example that's probably up right now. So let's say a home is worth $500,000, all right? Let's say you owe about $250,000 on there, okay? So about $250K of equity. We're going to keep this simple, all right? We're going to say the new mortgage is going to be $400,000. So that's 20% of the $500,000, all right? So the max mortgage can be $400,000. So that leaves about $150K of cash, let's say, all right? Now, we're not worrying about closing costs, which you're going to have depending on the state you're in. All right, but let's just keep it at $150 for right now. That's the cash you can get out. Cash, not a line. This is straight cash to do what you want with it, all right? Like you'll see, I'll get into this in a moment, you have equity left of $100K, right? If you're doing the simple math here, all right? Now, let's say your current rate on your mortgage, 30-year fixed, let's say, is 3.25, all right? There's the principal and interest payment, which is not taxes and insurance built in, all right? And it was a $300,000 starter home when you bought, let's say, 5-6 years ago, all right? Now, the new rate's going to be higher right now. The rates have kind of crept up. But remember, it's all about budget. It's all about budget. It's not necessarily all about that mortgage rate. Could be other rates that we're going to get to in a minute, okay? So check this out, all right? We're increasing our loan amount. We're even increasing our rate. Like you'll see over here, your principal and interest payment goes up about $900 a month. But JP, why does this even make sense? All right. Well, it depends on your specific situation first, okay? But here's what we did for a client. They had a student loan of $50,000. That was $300 a month, all right? They had a car loan, $40,000 car loan, 5% rate, let's say $750K. That's on like a 7-year term. I'm sorry, $750 per month. Then you have 2 credit cards, adding up about to $30K a month, $350 a month minimum payment. And then you have a personal loan at 10%, all right, for $30K. That's $650, all right? If we add that up, both of them, the minimum payments and the balances, there's $150K right there, okay? And the payments, when you add that up, is $2,050, all right? So if we do some simple math here, we're getting rid of $150K worth of debt. We're getting rid of just over $2,000 in the minimum payments on that debt. So look, we're freeing it up, all right? We're being able to sleep a little bit better at night, all right? Adding all that up, getting rid of $150, getting rid of that. Your payment's going up $900 a month, but if you do some simple subtraction, you're actually winning by over $1,100 per month. So by doing this, you're freeing up $1,100. There's your cash flow, your net cash flow, and getting rid of $150,000 worth of debt. Now, totally understand our mortgage balance is going up, but listen, that's a fixed rate. That's spread out over 30 years. It's manageable in the short term, okay? And you could do a bunch of different scenarios here. Maybe it's not the best long term, but yeah, it kind of is. It's a mixed bag here. You're getting rid of all these other debts, okay? So that's how you can use this equity to get cash, get rid of all this debt, and free up net cash flow for your short-term goals, and really not that bad for the long term, okay? Now, we're getting back to the equity left. Still have $100,000 worth of equity. This is where now you go get that line of credit, because there's credit unions out there, a lot of different banks that are out there that will go up to 100% of your equity. Remember, the mortgage can only go to 80. Now you have this other 20%, get that line of credit, let it sit, okay? Use it for a rainy day. Use it for emergencies. Use it as a cushion. That's what we like to say. A safety net, all right, in case you need it. I'm not saying use it, but don't you sleep better at night when you know you have options instead of being trapped with all this other debt? So what we're seeing right now is a ton of people doing cash out refinances, having a specific plan in mind, like this, to pay off debt, free up cash, be able to sleep better at night, maybe get that home equity line on the back end, okay? And they are doing it now because they know that there's a good chance values have been high. It's been abnormal over the past few years, and it's got to come back to normalcy a bit. Not going to crash. Normalcy. And I'll tell you, I'll end with this. When things are lower right now, like the stock market, whatever it might be, usually this is a time where smart people take advantage of that market. All right? Yeah, stock market's down. Is it a good time to maybe get into the market? I don't know. Not a financial advisor, but you should probably talk to your financial advisor right now to get a good game plan. Don't panic. And if you need a good financial advisor, hit me up. Happy to help. Hope you have a great day. Hussbus bus stop.